across the board, there is some green. Nikkei is at a fresh high yet again, 1% higher on the Nikkei as we speak.
33 respondents differ with the market and the market pricing in the Fed futures market.
Things are slowing down, but clearly it's not breaking, at least not in the near term.
So this rate cut was definitely a surprise. It's probably a good step in the right direction.
But building on to our gains, the Nifty is up about 25 odd points.
It's not just that India is doing well. If you look at global markets, there's a massive repair job.
We have recorded the highest revenue, highest profitability.
I think companies which have demonstrated profitability track record have got good growth prospects.
JP Morgan has downgraded Persistent Systems to an underweight.
Right now, the Nifty seems like it wants to make a bit of a dash towards, the levels from where we started.
So these are seriously, lower inflation numbers.
So we haven't started the booking yet for the Invicto.
लेकिन अभी मांडवी में भी जो समुद्र है उसमें करंट देखने को मिल रहा है.
It is a bit of a mixed trading session, but largely a little bit of a positive bias.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. We are coming to you live, as always, from the CNBC-TV18 Moti Rosewal studios. I'm Prashant, with me, my colleague Surabhi and Nigel here from the studios, and from the newsroom floor, we have Mangalam joining in as well. Guys, good afternoon. Things are looking pretty quiet, aren't they? I mean, we are actually not a repeat of yesterday. It's much quieter because if you look at where the Nifty is from the opening level, we're up just 20 points. That's it. So it's a 0.25%, nearly a 0.25% gain on the day so far from yesterday's close, but just 20 points from the initial action, from the opening level. So it's neither here nor there. You got Bank Nifty, which is once again skirting around the 20-day moving average. It's right now trading just under the 20-day moving average. So we'll have to see if once again there is a break, there is a breach. There was one day before yesterday, but yesterday, we closed above it. Mid-cap indices, it's a little more muted. It's not, 1% like clockwork. It's more like 0.2% or so, maybe even less than that on both. Advanced decline ratio is positive, but again, nothing wild. And the big decision, of course, is from the Fed out there in the US, middle of the night for us. And, of course, expectations are that there will be a pause. And I think markets are completely positioned in that way. You look at yields, you look at the dollar, you look at markets which have rallied. There is very little room for disappointment or even surprises in that sense. And one hopes we don't get any surprises. Surabhi.
Hi, Prashant. First pause in, I think, about a year and a half, if they indeed decide to pause today,
March
right?
22 was the last one.
Okay. Yeah, so a little over a year for sure. So let's see if we get that pause or not. But what is definitely pausing is the bank side of the market. That's where the issue is. It's not a big decline or anything. But yeah, you have stocks like, Axis for now, ICICI Bank for now. They're kind of dragging their feet, keeping a lid on the gains. That index hasn't done anything throughout, as the chart pretty much indicates. And those are the constituents for you. Even IndusInd Bank, for that matter, has been down and out. Some profit-taking continues in autos as well. But the sector of the day really has to be metals, because that's been the story right from the start of the morning with this 10 basis points reverse repo rate cut coming in from China. So even now, this is the best performing part of the market, and your big names like JSW Steel, Tata Steel, right on top. Some of the consumer names are pretty interesting. Tata Consumer has been running away 5% up. I think some of the brokerages put out some commentary on the annual report. Not sure if they noticed something absolutely unusual there or not. But anyway, that's been a stunning mover, the top Nifty stock for the day. But Nigel, I guess it's individual stock action, but it's not a blowout move in the mid-cap market, like Prashant was also saying, which is what we had yesterday.
I'll tell you what, we're talking about these all-time highs. It's like, these sweethearts who are dating. She has committed to him. But only thing, matter of when, because so we're heading there to those fresh all-time highs.
And not if.
Not if, correct. So we're heading out there. They have already committed to each other. So that's point number one. The second factor is, just to bring in a little bit cricket as well. Feeling good this afternoon, The star batsman is not performing. The one that got us here, the Nifty Bank. So you're having a team that's all set, it's all charged up. But when that star batsman, like in the 90s when Sachin didn't perform, or the last few years, whether it was Virat or Rohit Sharma doesn't perform. So you're feeling that the team is strong, but you need that one good knock from the star batsman. And currently the star batsman has said, no, I want to pause, which is the Nifty Bank. on a day-to-day basis, I think from the day the RBI governor delivered that hawkish comment, or it was perceived as hawkish, we hit 44,500, and from there we're struggling to get past up. I don't know whether there's a trigger in store, but we need the Nifty Bank to find its form, some form at least, and we'll be at fresh all-time highs. Mangalam, what do you think of it?
Well, Nigel, you spoke about cricket. I think the one star batsman that could perform now is Reliance. Yesterday ended at the high point of trade, and right now as well it has moved to the high point. So if the Nifty Bank takes a backseat, maybe can Reliance do a Rinku Singh and take the Nifty to the last bastion, a fresh record high by doing what it does with the kind of weight that it has on the index is something we'll be watching out for. But at the same time, increasingly a lot of the good news is getting priced into the markets as well, because now 91% of the street in the US is positioned itself for a rate pause. So let's see what happens and where we go from here. The Nifty Bank, again, like Prashant said, skirting around the 20-day moving average itself. And even if the mid-cap end of things, you look at it, there are stocks which are advancing, but today the advance decline ratio is more normalized at an even keel as against the last few days, where there were way more number of stocks advancing than declining. And the quality radar in terms of stocks which have gained in the broader markets too has dropped a little bit. Case in point, something like Cravatex, which is up 14%. They sold their business to Metro, the key business, the Fila business. But despite that, we're seeing a big move on the stock. And a lot of the stocks which are buzzing around aren't the ones that usually gain on high volumes. They are towards the fag end of an up move that we see in the small cap end of things itself. Just one thing that I'm watching out for today, it seems like someone's pressed the buy button on all Tata Group stocks, apart from Tata Chemicals, which has a fundamental cut in soda ash prices. All the other Tata Group stocks doing extremely well, be it Tata Consumer, Tata Steel, or another group of Tata stocks as well. Trent again has moved to the high point of trade. So maybe Tata Communications for second day running is doing well too.
You took the cricket example ahead. I thought you were going to tell us about your experience in the past, maybe in college wooing someone or something, but glad you kept that out of the way. You went with the cricket, which is the safer one, I would think. Well,
always, Nigel. No wooing. I don't know what wooing is actually.
All right, let's talk post the show. Let's move on. Let's find out how you position yourself in the final hour of trade. Well, Mitesh Thakkar is back with us. Mitesh, what do you think? The markets on a day-to-day basis, I think the problem is we have the SGX 50 that is blinking green. If you chase that, then you're in trouble. But if you look to buy the intraday dip, then it's better off. So quick view on the index and a couple of stocks as well.
Nigel, I think on the index, you were highlighting the importance of Bank Nifty. And actually, since the morning, I've had this view that we are not going aggressively long over here, though we have some longs on the Nifty, purely because of the fact that the Bank Nifty is not showing signs of participating on the upside. So the Fin Nifty, the Bank Nifty, I think both the indices and, all these indices have constituents which enjoy some good weightage in the Nifty as well. They're not participating, so we kind of wait and watch. In fact, if the Bank Nifty starts breaking 43,800, we might actually have a Nifty long and a Bank Nifty short position as well. So I think it's a situation when the market is getting slightly, subdued or slightly, under pressure because of the fact that the 40% weightage, which is Bank Nifty, is not participating. And I think that seems to be the case in the short term. So on the Nifty, Cherry stop loss is about 18,685 and 690, and around 18,800 trying to take profits. And only if the Bank Nifty joins on the upside, then I think, we'll look for a breakout beyond 18,820. On the stock side, I have two buy calls. ICICI Pru is something which has come on the list. It's a buy with a stop at about 510 for targets of 540. And a cash stock, and I think you were just highlighting Tata Group stocks. So I've got Tata Coffee on the radar. I think it's given a very strong price volume breakout. That's a buy with a stop at 243 for targets of 270.
Okay, got that. Thanks very much for the calls, Mitesh. We'll come back to you for more discussions in about half an hour from now. Let's focus on the stocks then. We have Ekta joining in. A couple of pharma names actually are making it to the headlines today. Now, Ipca has been under pressure, and Ekta is here to tell us exactly what's happening here. Ekta?
Thanks for that. Well, yes, Ipca Labs is in focus today because their Ratlam facility, we had broken this news a couple of days ago, has been inspected by the US drug regulator, and the inspection concluded. It started on the 5th, ended on the 13th, which was yesterday, and was issued 11 observations by the US drug regulator. Now, that is exactly what is concerning the street, because this plant, along with two other facilities that it has, basically the Indore SEZ as well as the Silvassa facility, all three of these facilities have been under import alert since 2015. So they are barred from manufacturing and supplying from these facilities to the US markets because it does not fit their standards. Now, in terms of the Ratlam facility, we don't know what the nature of these 11 observations are, but the assumption is that since they already have an import alert, which means that they have regulatory concerns since 2015, plus you've received 11 observations, the assumption is that it is probably going to be a longer road ahead for them to resolve the issues and hence get out of the woods when it comes to regulatory concerns. However, what is probably negating the fall at this point in time is that it is probably going to be a worst-case scenario as a status quo. So that means that the import alerts continue. Other growth drivers include the India business, other export markets. So that continues for the company. And remember, just in the month of March, April, they bought a stake in Unichem Labs, which is the listed company. They bought the promoter stake. They have an open offer as well. And that would mean that they would get access to Unichem's manufacturing facilities, which are US FDA compliant, and hence the street is not too worried about the company making their mark in the US markets. They've also done successfully in other markets, and hence the picture probably continues to be the same for them.
Okay, got that. Thanks very much, Ekta, for the details there. So that's Ipca under pressure, 2.5% lower. Let's welcome in Prakash Diwan on the show today. Prakash, good to have you on as always. Hope you're having a good Wednesday. So there's Ipca on one hand, you must have heard Ekta, and there's another stock that I actually wanted your take on, and that's Mankind Pharma. Mankind's benefiting from just this overwhelming positivity in the market. Lots of brokers have written some very optimistic sounding notes as well. So your thoughts on either one or both, if you look at both?
Good afternoon, Sylvie. Thank you. I think Mankind Pharma is probably the new kid in town in terms of people having to kind of look at potential allocations. And given the scale of the business, and remember, domestically, it's one of the largest. It'd probably be in the top three by volumes and by revenue, that is. The only thing that people had issues with Mankind Pharma is their ability to be able to go beyond the India business, and of course, the OTC piece, which they are more well known for, whether that could kind of continue to grow at a good pace. I think it's a wonderful company. The only issue is that it came at a price level which was slightly seemingly higher than what the valuations were, a bit stretched given the current business, but given what it can deliver, probably, the price earning growth multiples will help you justify that even at these levels. So there is interest, and it's a perfect institutional play in that sense. Any institution willing to take exposure to pharma will find it very amenable to have these kind of stocks and scripts in their portfolio. So from that perspective, I think it will continue to see some additions. Whoever has missed out on participating in the IPO, it probably, beyond the anchor book and all, they'll probably want to add this. So I've seen this happen in some of the mutual funds also in the quarter gone by. And then you'll continue to see a little bit of build up, and then there'll probably consolidation phase. So it's a positive view, but to me, it's a bit priced at a valuation that is not very comfortable. As a value investor, I find better things in some of the smaller cap businesses. So that's my personal view. On the Ipca Lab thing, I think now you know why the Ipca management went ahead and decided to acquire a business which at that point the street didn't like, and it was punished for it, right? So there's very clear indication that they try to de-risk themselves and then make sure that the US business continues to contribute at some point and not miss out on that. I mean, they have a very, very strong domestic footprint. The rest of the world also, they've done some amazing business growth, but it's the US business which was always struggling. And then with this kind of a remediation, which is, as Ekta rightly said, a long drawn journey ahead, it might make sense to get that integration done with that new asset acquisition and start looking at growth out there as well, right? So they have all the other components in place except for the manufacturing facility, which is US FDA approved. So that's where it could come in handy, and that's probably something which will start paying off in the next couple of quarters as the integration gets underway. So quite positive. This probably is an opportunity for people to get in who like turnarounds or special situations.
Prakash, what about KPIT Technologies? That's been the big re-rating candidate, right? It had a bit of a valuation discount in comparison to Tata Elxsi, and that stock took off. In the last 2 years, I think it's moved from early hundreds to 1,000 rupee odd mark. But in the last two sessions, that yesterday, sometime during at around 2:30 odd, we saw some selling. Today, it's down another 5%. So 10% cut in 2 sessions. Is it just the fear about the mid-cap IT space? Or do you think there's something specific with regard to KPIT Technologies? I haven't heard much.
I don't think fundamentally there is anything that has been shared by the company in terms of warranting this kind of a disappointment or this kind of a sell-off. But to be honest, it's like a business which has gone through lots of these ups and downs, which probably are predicated on the back of news flow. For example, when they got into the Honda mobility arrangement, there was a very clear expectation that this is going to take too long. It's not something which will change immediately. But the fact that they have started developing very customized solutions for big players like Eicher, Volvo, like the BMW engagement that they have, and now the Honda thing. These are very strong, vectors which start helping you scale in a way that becomes a moat at some point in time, Nigel. So, once you've got a footprint, you've got a foothold, there's not much of room for others to come in and start doing it. And everybody would have to go to them. So I think what KPIT is doing is they're expanding their and deepening their engagement with some of the clients with an eye on the future on the electric mobility side. So that's going to be a very big piece, which very few people will be able to enter at this point in time. It's too late for anybody to be able to make those kind of investments and get it. The valuation stretch is something which is responsible for this kind of thing. Any profit booking will make the stock vulnerable because it has to yet catch up on the earnings side, right? So it is a bit of an expensive stock in the same genre as Tata Elxsi, but maybe a slightly different business profile. But my sense is as new offerings come into the market and then the market is kind of readying itself to absorb Tata Tech, which is also a very promising play, given what we've seen in the notes that have been coming through. If that were to come, there will be some sort of a pairing of allocation with both these names. And KPIT, given, as I said, the high valuations, is probably more vulnerable to that.
Okay, all right. Prakash, it's a pleasure. A short conversation today, shorter than usual, but lovely having you with us as always. Thanks very much.
Thanks.
We'll take a quick commercial break here. We'll come back. We have Prashant Jain of 3P Investment Managers joining us on the other side. We speak with him about markets, his thoughts on sectors, valuations, everything. That's a special conversation. You don't want to miss it. We're back in 2. Okay, welcome back. Things are looking quite okay in this even keel. I mean, I think that's the way to put it. Banks, though, are under some pressure, as we've been pointing out. Prashant Jain is Chief Investment Officer at 3P Investment Managers. He's joining us right now on the program. Of course, Mr. Jain needs no introduction. He's one of the longest-serving mutual fund managers in the country. One of the most visible faces when one talks about investment management in India. Managed the HDFC Balanced Advantage Fund at, of course, his erstwhile organization, returning almost 18% per annum since its launch back in 1994. These are statistics in some ways which, investors, in a way, know by heart. He's, of course, launched his own fund, his own investment firm, and is now managing about 4,000 odd crores and in the market now. Managing funds via the entity 3P India Equity Fund. Mr. Jain, great to have you with us here. Thanks very much for your time. Prashant, this side. So let me start by asking you, how's the experience been? I mean, managing funds through your own entity as opposed to HDFC AMC, which in many ways was your entity when you were there, because you were the longest serving fund manager. But this has got to be different, right? So tell us a little bit about that.
I think it's been, I had a very good stint there and I have enjoyed this part also. And what I like about this part is, there are no shareholders to answer. There is no expectations to meet except the customers. I think the investing bit stays the same, but I definitely don't mind the lack of pressure to grow. I think otherwise it's been quite smooth and nice here.
Yeah. One thing I've heard, Mr. Jain, is people who want to invest with you is that they say the minimum ticket size, etc., is too high. Would you plan to, at some point down the line, open it up for the public, or do you think that's unlikely?
No, I think, we are a very small organization. Our head count is about 22, 24 people. So I don't think we are geared to handle a very large number of investors. Currently, we have 140 odd families. I think we'll take that call as we go along. But at this point of time, I don't think there is any plan really to do that.
Okay, got that. Let's just get to the markets then, Mr. Jain. What are your thoughts? I mean, we've had a fantastic run. We are one of the very few markets, large markets, which are almost at all-time highs. Many other markets are closer to their 52-week highs, but we are at all-time highs. What's the overall view?
So I think the economy is doing quite well. And in fact, the tailwinds have improved in India. I mean, because post-COVID, the acceptability of remote working should broad base the offshoring of services. And I think we should create a lot more jobs as global companies shift capacity centers, support centers, back offices, whatever you call it here. I think in manufacturing also, our wage inflation has been the lowest amongst manufacturing countries in last 10 years. So India is now cost competitive in manufacturing. Apart from that, for reasons of de-risking and geopolitics, I think manufacturing will come to India this time around. I'm quite optimistic. And manufacturing is a very large opportunity, much larger than services. So I think GDP growth in India should accelerate compared to last decade. Coming to markets, for 2 years, our markets have been flat. So I think we have had a decent period of consolidation. Our market cap to GDP is now under 100%. Our P's, which had gone up to almost 24 times, I think markets are now trading close to 17 times next year earnings. So I think the excesses are gone. I think these are very fairly valued markets. And barring some global shocks, I would expect markets to do well over the medium to long term.
All right. Hi, Mr. Jain. Good to speak to you. And this is Nigel on this side. My eyes lit up when Prashant asked you about whether you're going to be lowering the ticket size. But I think I'll have to wait a little bit longer, to invest out there. But, Mr. Jain, you have been a value investor, and pockets of value included the PSU space. Now, that index on the whole has done quite well this year. There's a dividend yield that plays out there. Valuations have always been at a bit of a discount as well. How much of that PSU theme has played out? And do you continue to be bullish on a select PSU companies?
So, Nigel, I am happy to be called a value investor, but value investing should not be confused with low growth or low PE investing. And value investing means that you will pay a higher multiple for a faster growing business, but not overpay for it. So that's what value investing is. And I think PSUs, one of the reasons why PSUs underperformed, that PSUs mostly are in the economy sensitive sectors. So whether it is banks, commodities, or power sector. And in COVID, the economy was badly hit. And PSUs in general were very badly hit. And that is why markets started clubbing PSUs as a group, which I don't think is the best way to look at this space. But you are right, these stocks have done extremely well. I think the ESG overhang, which again I have said in the past, I thought was not the best way to address that issue. I think that's the markets have overcome that, and you can see how tobacco, defense, fossil fuels, all these stocks have done extremely well. I think the pockets of undervaluation in these markets are very few. This is a very finely balanced market. So in the last 2 years, when markets have been broadly flat, sectors that were excessively valued, I think those excesses have corrected, either because of time correction, like in the case of consumer stocks, or by way of price correction, like in IT stocks. And on the other hand, sectors that were deeply undervalued, like corporate banks, defense, tobacco, power utilities, have gone up between 2 to 5 times. So that those pockets of valuation have also disappeared. So I think these are very fairly valued markets, and even in terms of sectors, the dispersion in valuations, the mispricing is generally not there. So I would not expect these PSUs to re-rate materially in terms of valuations, but yes, to the extent there is earnings growth, I think those kind of returns one can expect even from here on.
All right, Mr. Jain, it's always a pleasure speaking with you, and I'll keep it pretty simple, just the way your investment philosophy is. Your company, 3P investment, 3P stands for prudence, patience, and performance. So tell us, what sectors would you be prudent about right now? Where do you see performance? And where do you think your patience is likely to be tested in the near future?
So I think what prudence stands for is something very simple, that don't buy a weak, unsustainable business irrespective of price, and don't pay a crazy price for a good business. And if you do these two, and if you are patient with that company, good company, reasonably valued, over time performance is the outcome. So I think that's the thought behind this name, 3P. I think the consumer space, to my mind, looks pretty expensive, though it's a very high quality sector. And I think it might test patience time and again, because this sector tends to undergo more time correction and less of price correction. So if you go back to late 90s, mid 90s, for the next 10, 12 years, some of these stocks remained flat. And what was a 60p became 20p over 10 years. So I think that space, again, to my mind, could test your patience if you are underweight that space. It could on and off, show bursts of outperformance. But other than that, as I said, to my mind, there are no meaningful pockets of either undervaluation or overvaluation. So in a way, this is a pretty straight, fairly valued market with no low-hanging fruits and no very large excesses either.
Okay, got that. So cautious on the consumer space. Prashant, hi, good afternoon. Surabhi here. Want to talk about a space that I think you like, and that's this entire capex story that's playing out here in India. And you sounded very optimistic on the prospects of GDP growth as well. Now the question is, how can one play this cycle? Do you think it's a multi-year cycle that started off? Where are we in the cycle? You have capital goods stocks like a Siemens, ABB, which have already run up a lot. Then you have the road contractors, or can you look at defense? But again, defense is a huge rally already that's happened. So how does one play manufacturing and the capex cycle, and where are we in the cycle?
Surbhi, that's a great question, but unfortunately, I don't have a great answer because what you said is right. There is promise of growth. I think it should be a multi-year cycle. Corporate leverage is at a 15-year low. Corporate profitability has recovered completely, around 4.5% market profits to GDP. Bank balance sheets are extremely healthy. Foreigners want to come in, set up businesses here. Government is very supportive of infrastructure. So I think capex outlook is very strong, and but the markets are pricing this in almost fully. So I would say I don't have any great answers. We have to be, either very patient with this sector and hope that the growth sustains. But ideally, I would like to wait in some of these companies and hope for some corrections, either due to some short-term challenges with the performance. But high-quality capex companies are indeed very close to fully valued. At the same time, why I still have a doubt about what I said is if you go back to the previous cycle of from 2000 to 2008, some of these companies compounded earnings at 30-40% a year. I think that is less likely because the base then was extremely low of profitability. But nevertheless, that tells us that when capex picks up and the good companies that have good technical solutions, they can grow at fairly high rates for quite a long period of time. And that's why I want to own that space, but we are a little cautious for reasons exactly what you mentioned.
So, Prashant, I completely understand the caution with respect to valuations, but let me ask you this. Are we in a slightly different normal today? Because what we keep hearing, the narrative that we're getting from a lot of foreign investors is that money is looking to move away or at least partially move away from China, and it's looking for new homes. And look at what's happened to the Japanese market in that context. We hear that a lot of that money or some of that money might find its way into India as well. If that were to happen, then do we need to be prepared for above normal multiples? And then could the argument on valuation, perhaps do we have to have a new approach towards it?
No, I don't think fundamentally you will change valuations because ultimately it is DCF, and DCF is not a function of what markets are paying. But yes, what has happened to several countries is that when a large country has grown ahead of others for sustained periods, the whole world wants to invest there, and it can become very expensive. So I don't think one can rule that out at all, and it is a possibility. It may well play out. Another interesting thing is if you look at the way Indian markets are evolving, the dependence on foreign flows has reduced considerably. Look at the last 4 or 5 years. Markets have been either positive or flat despite few years of significant FII selling. So I think equities have moved from a peripheral asset class 2-3 decades back to a core asset class. I think close to 3 lakh crores of money flows into these markets through various formats: EPFO, NPS, insurance, mutual funds, EMS, AIFs, direct equities. That's a large pool of money that is coming in, and still that is only 10% of household financial savings. So I think over time, I feel the volatility of Indian markets will be structurally lower compared to the past when we used to see bouts of volatility linked to global developments. But you are right, if at a time like this when local flows are strong, if foreigners also come in, one should not bank on that, but it can't be ruled out that markets may trade at much higher multiples.
And someone said 10 years ago, the saying used to be go up using the stairs, come down the escalator. It is flipped now. Go up escalator, come down stairs. Well, absolutely. Mr. Jain, let's just, you said there are no real big pockets of undervaluation or anything. But consumers, for example, which you're underweight on, is there anything there? One complaint with consumers also is that valuations are very high. But within the consumer space, are there pockets where, because some businesses have been struggling, etc., valuations are at troughs? Anything at lows that you'd want to kind of buy? Anything you like?
So consumer space, I don't think to be honest, like anything. And I don't tobacco does not qualify in the strict sense as a consumer company, though it has financial characteristics of that those businesses. I think if volume growth there sustains, I think that business could still trade higher. But otherwise, whatever I have looked at in the consumer space, I think the multiples appear to be quite rich. Wherever multiples are low or stocks have corrected, these are by and large in categories where the growth prospects are quite, non-encouraging or not so good. They are categories which are either very mature or which don't connect very well with the modern or the young consumer.
Consumer durables as well? I mean, a fixed...
Consumer durables also is very expensive, and you can see this is a low involvement category, and pricing power is a lot lower than the consumer staple space. And markets, in their wisdom, have treated this category like a consumer staples company. I don't think that is right, and I think it will over time correct. And you can see what has happened in the air conditioning space. So I would expect the margins in many of these categories to structurally move over time.
Prashant, I can't let you go before asking your view. You're such a veteran of the markets on what you've made of the consumer technology space. We're talking consumer, and we've heard you sound cautious. But a lot of these companies, the business models have been based on just the way consumers are consuming, right? Whether it's beauty or whether it's you're buying food, whether it's you're making a payment. Now, the managements, I think, have learned a lesson. They've learned that in public markets, you can't, simply look away from profits. The good old-fashioned bottom line is still very, very relevant. We're seeing some of this play up in stock prices. What's your thought process on this? Do these businesses look interesting? Do the price points look interesting to you at all?
So I think, the consumer has moved for sure. So some of these businesses will over time turn out to be great businesses, and they have first mover advantage as well. But I think we have to be, the way I look at this is the business building moats around it? Are the moats becoming bigger as the business grows? I think in the food delivery space, I think the structure of the market is extremely good. I look upon these as logistics companies, C2C, consumer to consumer, not B2C, not B2B. So I think as scale grows, the competitive advantages of these businesses will deepen. And I think it also matches with the changing lifestyles of more working women, less cooking at homes, and people marrying late, smaller families. So I think food ordering will continue to grow. The market structure is very nice. It's a duopoly, so new entrants are less likely. Of course, these are expensive businesses. These are very expensive. But still, since the growth prospects are decent, I think there is some, my preference would be for that space compared to the other spaces that you mentioned.
All right, we'll leave it there. Mr. Jain, great to have you with us here. Thank you very much for your time. Appreciate your time and thoughts here on CNBC.
Thank you. Thank you.
All right, well, we got the market, which is up 40 points, 18,756. So there's not very much by way of change. Bank Nifty is still a little down and is still around the 20-day moving average. We'll take a break here. We come back with our segment, D Street Chatter. Nimesh will be with us for that. Our technical calls, short-term trading ideas after that. So stay tuned.
Ritu, how many steps are you done with?
Barely
not the walking steps. Skincare routine. How many steps of skincare routine are you done with?
I'm easy, but look at you talking about skincare. What have you been watching?
Those get ready with me reels on Instagram.
Oh, the women and their big...
Increasingly men. They're watching a lot of products, using a lot of specific products, mustache oil, beard oil.
How long has it been since you started getting these on your feed? Not too long, right?
6 months. But it's a category which is increasingly growing, right?
Yeah, it is. And that's something we should definitely track because We didn't see this kind of growth before.
So what's blooming in men's grooming? Welcome back. You're watching us here on Closing Bell. 18,750 is where the Nifty has been stuck to from the start of the show to even now. We have the Nifty Bank mildly underperforming right now. McLeod Russell from the broader markets is suddenly a stock which has spiked up. And, as Nimesh had pointed out yesterday as well, perhaps the quality of the small cap stocks which are rallying is something that is going down increasingly as the rally increases. So we have Nimesh back with us. Nimesh, what's the buzz on the D Street today?
Manglam, if you remember, even yesterday the feedback was that there's going to be large FI buying, and largely one of the sovereign fund is a buyer. The feedback is that follow-up buying seems to continue in today's trade as well, and that's largely driven in the large cap niche. That's why the Nifty is relatively outperforming the broader markets in today's trade. The other interesting feedback that I got today is some bit of pre-positioning seems to be in the rate-sensitive stocks out of the Fed action tonight. If there is a pause, you might see a bit of further momentum in the rate-sensitives. The real estate stocks, some of the auto names are buzzing in trade today. I guess the problem seems to be in the Nifty Bank, and that's struggling a bit in today's trade. A couple of reasons for that. One, there was this news about the HDFC Bank merger and the cap for the mutual funds. That can be a dampener for these two twin stocks. And also the flows are quite mixed in the banks as well. So even within private banks, there are some buying, some selling as well. So that's the reason why the Bank Nifty is struggling in today's trade. I guess the other sector which is trying to see a bit of built up and some momentum as well is the metal names. And even within metal names, it's largely the steel stocks which are well bid by some larger institutions. So largely at the HNI desk. So that's where the interest seems to be. So broadly, the flows are positive. The follow buying from the large sovereign fund continues, but it's the Bank Nifty which is struggling because of HDFC twins.
Right, a bunch of individual stocks doing well. V-Mart Retail, after a large trade, has rallied to the high point of trade, up almost 6% as we speak. But apart from that, you have a bunch of stocks you're watching out for.
I didn't add V-Mart to my charter list, but just for information, the feedback that I've got is there is a single buyer who's bought into V-Mart. So the disclosures could be important in that stock as well. The first stock on my list today is Timken India. Interestingly, very illiquid stock, not much been talked about. It's an MNC company, but I believe there's going to be a big offer coming very soon in Timken India. So that's something to watch going forward. So that's the first stock. The second stock is Zomato. After a big up move in the last many weeks, now some bit of selling pressure seems to be coming in. Today, I believe there were a couple of large offers as well at few HNI desks. And also there is an overhang of a large block coming in Zomato very soon. So that's the reason why, and that explains the reason why Zomato is under pressure in today's trade. The third stock is Sangam India. Again, there was a large block, nearly 2% equity has changed hands. And post that, so there was a huge move. Stock is up 17-18% last I checked. Even in Sangam India, the feedback is maybe one single individual investor has exited in today's block, and after that, you've seen a big move in that stock. And the last stock is Phenolix Industries. Again, something which is the stock which has not done much in the last many weeks, now been consolidating. Some sort of up move in the last couple of days. And one of the reasons is there was a large domestic mutual fund was a seller. That selling seems to be largely out in Finnish indices, and some large HNIs also bought. So this is the reason why it's back on the volume list, and it's been buzzing for the last couple of days.
All right, interesting list as always, Nimesh. Thanks very much for that. We'll keep an eye. Mitesh is with us with ideas on what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
So BTST and Godrej CP with a stop at 1,065. 1,060 for targets of 1,090. And the other one which I like is Zydus Life. That's BTST with a stop at 525. Targets of 542.
Sorry, the first was Godrej Consumer and then Zydus.
That's right.
Got it. Okay, well, thanks for that, Mitesh. So those are sort of, ideas, very short-term trading ideas. The FOMC decision is tonight. A CNBC survey shows majority of respondents expecting status quo. They're also expecting the Fed to hold fire at least till November this year. This is CNBC's Steve Leisman with highlights from that survey.
You have some surprising results, Joe, from the CNBC Fed survey. It showed our 33 respondents differ with the market and the market pricing in the Fed futures market. They're forecasting the Fed's course is none and done. That is no rate hike now and no more this cycle. I'll show you the top line results here. 91% of the respondents see no rate hike at this meeting. 6% do see a hike. 63% say the Fed won't hike in July either, with 34% forecasting a hike. That differs with the market, where there's like a 70% chance of a July hike. The funds rate peaks at 524. That's a bit higher than the current rate because some respondents do see that July hike. It raises the average. The Fed is then seen on hold at the peak rate for nearly 8 months. Here's how the rest of the year shapes up according to the survey. More than 80% see no change in September and November. 71% forecast no change in December, but a 26% minority, they are penciling in a cut. So all that white is no change on that board. That's how you understand that. Peter Bookvar, Chief Investment Officer at Bleakley Group, writes in, Jay Powell will talk tough at the presser after not hiking rates, but he's done with the rate hikes. Bookvar says credit tightening from the banks and decelerating housing inflation are going to keep the Fed on hold. One factor that could explain this difference between the survey respondents and the markets is concern about bank lending. Take a look here. 53% said they reduced their GDP forecast for this year because of tighter credit standards. 47% did not. The average reduction was 0.3 percentage points. Actually, that's a big number if you're talking about some of the low forecasts that are out there. Still, there are many who think the Fed should keep raising rates.
Okay, well, very few of them, I guess, because the large consensus is that we will get a pause from the Fed today. In fact, earlier we were in conversation with Jahangir Aziz, head of emerging market economics research and commodities at JP Morgan, who also feels that we're probably in for a long pause from the Fed. Take a look.
The view is that, the Fed is going to take a pause over here and that the pause is going to be prolonged. And in a sense, the Fed is going to let those long and variable lags to play out and see where the economy goes. The economy is in a slowdown trajectory. If the dots are pointing higher, then clearly the FOMC is signaling that most likely we might have to end up raising rates sometime down the road.
Welcome back. Another day, another new high for Nestle. That's the stock which has moved to the high point of trade, has been doing well, and giving it company on the way up is HUL at the day's high for that stock as well. Reliance continues to do well, and we're seeing a bit of a spike on Grasim. So Grasim is another stock which has spiked just a bit and moved to the high point in the last few minutes. But from the broader markets, actually pull up Paytm. Paytm's done well. It's not only has it moved to the high point of trade, in fact, with the move that we're seeing on Paytm right now, it's increased its monthly gains to over 25%. So almost 25% in the last few trading sessions that we've had in June itself. So let's see where this goes from here. Actually, we have Mayuresh Joshi joining in now. Good afternoon, Mayuresh. Your thoughts on Paytm and a lot of these new age companies? I mean, some of them have found their footing in the month of June itself.
Afternoon, Mangala. Oh, absolutely. And in fact, once the Paytm management had given a very positive outlook a couple of quarters back, and as they have started delivering in terms of numbers, I think the kind of expectations that a lot of analysts had, specifically in relation to the September quarter, I think they have fared a tad bit better before that itself. So I think the outperformance in terms of earnings delivery that is coming through for Paytm obviously is getting reflected in terms of the price as well. And therefore, I think the strong momentum that the stock probably carried at this juncture is something that might get elongated or consolidated in the near future. So I think as the numbers keep on coming in, and if the numbers are beating street estimates, I think you'll probably see that within the platform companies, I think this stock probably will stand out.
Okay, that's Paytm. Mayuresh, hi, good afternoon. Let's get your view on the Nifty winner today. And what a move on Tata Consumer, right? It's a fresh 52-week high on the stock. I think the market's just pretty enthused maybe with the commentary that's coming in the annual report. I think obviously company making some pretty grand statements about becoming an all-encompassing consumer company. But your take, given where the price is, the dynamics, all that's at play, what's your view on the stock?
Afternoon, Surbi. I think it's been a stark outperformer over the past few weeks. And again, I think very, very positive commentary from the management as far as the outlook is concerned is very, very supportive as far as the price is concerned. Now, as far as the core business is concerned, expectations in terms of discretionary spending holding out, at least for the urban and the semi-urban markets, is something that will hold in good stead for a lot of these consumer discretionary companies in general. What you've probably seen across its product lines have been a very stable performance, both in terms of top line and some elements in terms of margin compression in the past few quarters, which was very, very volatile. With input costs coming off, you are expected to largely observe that margins across their product suite should largely remain very, very stable. Last but not the least, in terms of the various segments that they have on offerings and the various SKUs that they're probably planning, the kind of market share gains that they can probably do with a far more retail outreach, or rural outreach, and consolidation in terms of their various businesses as well. I think a lot more synergies can get built in both on the revenue and the cost side. So yes, I think on the O'Neill lens, Tata Consumer, Mangala mentioned the stock Nestle, they still remain on our global focus lists.
All right. Hi, Mayuresh. Mayuresh, what about Somani Ceramics? The ceramic space is buzzing. Somani Ceramics has promised in the past, but delivery has been a little bit short, though it enjoys that valuation comfort. As we speak, the stock is spiking up. Your view on the ceramic space, and does Somani find a mention in there?
Afternoon, Nigel. So again, I think in terms of how the numbers are placing, you're absolutely right. What probably happens in terms of volume growth going forward, I think is going to be a very critical element for most of these ceramic stocks. So if you're talking about Somani, I think Cera is one stock on the O'Neill lens, which trades above all moving averages, above its key pivot levels as well. But a large element in terms of their input cost, and specifically gas pricing expected to go down significantly, is going to be a big boost in terms of the margin performance itself. Now, as operating margins stabilize, I think it's entirely a game in terms of how volumes are expected to play out. My own sense in terms of volume growth should be reasonable enough for most of these ceramic companies going forward. As a proxy on what you've probably seen in terms of real estate too, I think ceramic players should be in a big advantage going forward. And therefore, operating leverage should start playing out quite meaningfully in the second half as demand comes back very, very strongly for most players. But between the two, yes, I think Sera a little bit richly priced compared to Somani, but Sera probably remains on our lens as it trades above key moving averages and key pivot levels on the ONE.
Okay, got that. Now, just looking at some stocks on the move, and Aster DM has suddenly taken off. There's an 8% move on Aster. It's the big one out there in terms of the mid-cap action. Zomato is down about 6%. Quite a cut on Zomato on the lower side. Some interesting moves on both sides of the spectrum, basically. Aster days high, and Zomato lots of pressure. Mayuresh, do you track Aster by any chance?
Don't do, Surbi, but what we are really liking at this juncture at O'Neill, again, a proxy in terms of how stock markets have behaved, the expectations in terms of retail investors, is KFin Technology, I think. The stock has been doing really well in terms of numbers delivery. Numbers in terms of revenue growth has been outstanding. EBITDA margins for the quarter gone by almost 45%, largely annualized around 41-42%. ROE is more than 25%, cash on books at 300 crores, and an absolute proxy in terms of how the demat accounts are growing. Incremental addition in the month of May itself for around 2 million accounts. Equity AUM market share 37%, in the issuer solutions around 47%. And therefore, I think a very strong balance sheet along with very strong price action is what we can probably expect. So don't track Aster, Surbi, to answer your question. But something at this juncture that we probably like as a proxy to the markets is KFin Tech.
Okay, got that, Mayuresh. Well, the other one that we've discussed already on the show is Mankind. That continues to move higher. Zydus had some positive regulatory developments today, so 3% up. A couple of these names making it to the top of the charts today on the mid-cap screens.
You know, Surbi, just a word on Aster DM. The trigger for the stock, it always was trading at a discount. I think it was trading at around 8 to 9 times EV per EBITDA because bulk of their business is in the Middle East. Smaller part of their business is in India. Now, reports have been indicating that they want out of the Middle East business. So that's bulk of the business as of now. The key trigger from here on is if the promoter entity, the current promoter entity exists, then they'll get some money. What do they do with that money? How much will they scale up the India operations? And if there's remaining money, will they return it back to the shareholders? It always had valuation comfort. And, that's why the stock re-rated a bit. But I think the big trigger is, will there be a change of the promoter entity? That's what the street is watching for.
Okay, very interesting. All right, that could explain some of this excitement that's building up on the stock. This month alone, I think it's up 19-20%. So big move there on Aster. With that, I think, Mayuresh, we'll take your leave, just getting down to the last couple of minutes of market closing. So thank you for joining in. We'll look forward to more conversations in the future. But for the time being, it's been a very quiet kind of a session, a steady session, but one where banks completely played spoil sport. So the bank Nifty is actually looking at a cut of about 0.25% right now. Pretty tight on that one. Okay, let's talk about then what worked for the market. 18,750 thereabouts. Remember, in just the last 3-4 sessions back, we were at 18,777. So tantalizingly close to the all-time high, but not quite there. What worked today? Tata Consumer, the top gainer on the index. Some of the metal stocks, thanks to the China news, the rate cut there. So Tata Steel, JSW Steel were up and about. Tata Motors is the one stock from the auto pack that has managed to find some buyers. Otherwise, auto has been seeing some profit taking. I'll give you some examples of Hero, Eicher. These were the auto stocks on the lower side because of that profit taking. Speaking of things down on the banking side, IndusInd Bank, Axis, ICICI Bank, these were some of the stocks that were on a weak wicket. But otherwise, Nigel, I mean, you did have Reliance, you had ONGC, even Lever for that matter. A couple of the other heavies batting. But like you're saying, the star batsman didn't quite help the team today.
Well, that's right. The Nifty Bank, it's a little bit out of form. The minute it knocks in a good, innings, then we'll see the Nifty move to fresh all-time highs. But otherwise, plenty of stocks in the broader market. So let's run you through a few. Sangam India, there was a big block today. The stock ends with a gain of around 19%. Interesting to see the buyers out there. You had FACT, FACT. That stock was up close to around 15%. Steel strips as well was up close to around 12%. There is hope that there will be some protection from imports coming in from China. Then you had a few more names. JSW Holdings, well, hope that the company is going to diversify, maybe something in it for the holding company. So the street believes so that stock was higher. Talbros as well was up close to around 10%. AGI Greenpack as well, higher in today's trading session. The list goes on and on, but the broader market party does continue.
Okay, so there we have it. We are ending with a gain of just about 30 points on the Nifty. So, Prashant, all eyes on the Fed. Do you think this meeting will even matter? Because consensus, pause, life goes on? Or can you expect fireworks?
Who knows? I plan to find out tomorrow morning, so I don't plan to.
No, not midnight.
You stayed up last two.
Not happening. That was only because of this mini banking crisis that we had. Otherwise, I think 5 a.m. is a good time to look at the market.
Or you were partying and then you just happened to stay.
Do update me, guys, if you're allowed.
All right, well, catch the coverage later today starting 11 o'clock. That's going to be the big one when we come back tomorrow morning. We'll slip into a quick commercial break here. On the other side, our special offering, Mad About Markets, comes up in just a bit. Stay with us.